Siyempre, marami silang mga INT dyan. Okay, sound check. Let me just see if this is working, guys. Okay. Hello? Let me just check if this is running. Okay, I guess this is working. Okay, I guess this is working. All right, folks, so welcome to 15 minutes before the open of the London market. Now, this is the first Friday of the month, and anyone who's been trading for a while would know that during the first Friday of the month, we are going to see non-farm payrolls data from the US. All right, so non-farm payrolls data, what does that mean for us? Well, guys, that means that today is likely to be one of those days where the Forex market could have potentially crazy movements. So why or what is non-farm payrolls data? Why is it so important? Let's talk about this. Now, when you say NFP, non-farm payrolls, you're basically talking about all the jobs generated outside of the agricultural sector in the US. Why is it important? It's important because the US is a consumption-based economy, meaning that unlike, say, China or Japan or South Korea, whose economies are focused on exporting goods, the US economy is more about end demand, more about consumers. Now, don't get me wrong, the US is also one of the biggest exporting economies out there. It's just that that's a smaller part of the economy compared to how much the consumption or end users, consumers matter as far as the US is concerned. In fact, let me check that, just how exact size of consumption in US GDP. Let me just check that, just how big is consumption for US. Let me just get that number. Now, the logic here, guys, is this. You just ask yourself, if you have a job, will you, or if you don't have a job, even if you have some money, say, even if you have some money in your bank account, but if you just lost your job or if you don't have a job, are you likely to go on a vacation? Are you likely to buy a new car? Are you likely to buy a new house? And I think for most normal people, the answer would be nope, you're not gonna spend as much because you don't have income. And this is why non-farm data is very important, because it measures the number of jobs generated outside of the agricultural sector, private sector and government jobs. And if this number drops, if this number weakens, then it does hint that potentially you could be seeing a hit in US consumption, especially if that number sees some form of steady decline. Let me just take a look at let's take a look at the forecast for the number. Okay, any trend in the forecast? It looks like the trend actually calls for actual figures exceeding consensus forecast. But if you look at that chart, if you look at the trend of the data, clearly it's been dropping. Although I have to say that 10 years ago, 15 years ago, if you hear about the US seeing 100,000 in its jobs data, then that's actually considered to be good. For today, consensus forecast is 126, coming from 177,000 previously. Now, before the release of that jobs data, there are actually telltale indicators, telltale economic indicators. And what are these? Well, let's take a look. So we have your ADP employment change data. Let me just look at that. So Tuesday we have JOLTS, came out strong. I think Wednesday is when, yeah. Wednesday we saw ADP, and ADP non-farm employment change data came out very poorly. 37,000 against 111,000 consensus forecast. Why does that matter? Well, ADP essentially processes a lot of the payroll data from the private sector. So they are able to look at trends, they're able to generate this information about what's going on as far as the jobs market is concerned, because they process payroll data. And that sharp drop in ADP to a lot less than the consensus forecast, a lot less than 100,000, is telling. It tells us that maybe you are going to see the official NFP data later coming out short of 126,000. Other considerations, other things to think of. Remember that ADP is just the private sector data, and the data later will include the performance of the, or rather, will include the jobs data coming from the US government. Now, I don't know, given that there's been a lot of terminations in the US government, they've been trying to slash the size of the US bureaucracy. I don't think that the US government will be adding much to what we saw, at least from ADP's expectations of what's happening in the private sector data. So what am I saying? I'm saying that there is a risk that we fall short of consensus forecast. And if we fall short, really well short of the consensus forecast in NFP, then that opens the way for a potential, well, let's just say a potential drop in the value of your US dollar. Again, the logic here is the US economy is mostly about consumption. People who don't have jobs are not going to consume as much. They're going to likely focus on the necessities. And if that's what they're going to be doing, then that lessens your consumption. And consumption is 68% of US GDP. All right, so let me just write that. 68% of US GDP is about consumption. So obviously, if we end up with a poor jobs data, a good chunk of that US economy would likely be seeing some pullback, some contraction even. Okay, now let's go to individual charts and see what can we do. Let me just switch these to dailies. Okay, if you look at your candles, it's interesting because the daily charts show that dollar has actually strengthened. Well, initially the dollar lost ground yesterday, but look at your daily candles. Look at your daily candles. Long wick in euro, in pound, Australian dollar. Gold actually gave us a bearish candle yesterday. So what am I saying? I'm saying that before the release of data that could be potentially bad for the US, we actually had a stronger dollar at the end there. Okay, so the dollar actually strengthened at the end of our trading day yesterday. So are we going to continue with that dollar strength trend, or is it something that we will be reversing later? Is the big question for us. Now, again, data is what? It's about 5 hours and is it 5 hours? No, it's about 6 hours and 34 minutes from now. So plenty of time before then. Is there catalyst for prices to move before the data? Let's take another look at the calendar. Well, we've seen some bad numbers from Europe. Industrial production in France, in the US, or rather in Germany. So actually some contractionary data, I guess that supports the notion of a stronger dollar. But at the same time, we have potentially bad numbers as well for the US later. I think at this point, our logic has to be, can we get the best prices before we dump the US dollar? Can we get the best prices before we see markets retreating from the dollar, favoring other currencies, because we're going to get bad US numbers? So let's see, folks. Let's start by taking a look at our euro. So what do we have in our euro chart? We have this nice trend line here. We've tested it before, bounced off it. We're actually in the process of continuing a bounce from the trend line, from the daily exponential moving average line. So overall, we seem to be bullish. We are trying to get another higher high, continuing this series of higher highs from before. All right. What do we have intraday? Okay, very indecisive with this latest candle. This is your swing from yesterday. Let me drag some Fibonacci's on that swing and see what the numbers are. Okay, let me just change colors here. Let me just adjust the parameters. So we want to see the values of those Fibonacci levels. So we should add percent string so we can get the values of our Fibonacci's. Okay, let me just extend this as array. All right. So we actually are below 61.8 fib retracement. Indecisive candles currently trying to ease lower, and we've had bad data. But we're also expecting things to be bad for the US later. So significant pullback has happened already. At this point, guys, I don't want to just say I'm going to buy or I'm going to sell at a particular price here. What we know for sure is that we had a candlestick that says, I don't know, indecisive, high wave doji. Candlesticks that look like this, they're called high wave dojis, and they are considered to be indecisive. So if previously you were trending lower and now you become indecisive, then obviously there's a chance that things will go around. There's a chance that this might turn up at some point. Okay. So what's the plan then? Well, I'm looking at this and I'm thinking, I definitely don't want to sell your euro at this point. Sure, we've had bad data from the US, or rather from Europe already, but we expect some bad data from the US later. So the plans for me are this. As long as we stay in relative proximity to this area, to this zone, we don't want to do anything. If for some reason this chart starts picking up and we push past the high of our high wave doji, then at that point that becomes a bullish chart for me. Immediate objective would be the earlier highs. Eventually, again, it would depend on just how bad things are for US data. If it turns out poorly, then I am not averse to looking for prices to push even as high as yesterday's market. So folks, at the moment, we are not willing sellers in EUR USD. We just don't think that there's a lot of ground for the dollar to strengthen at this point. Your immediate market action seems to be for further declines. We will just ignore it. If for some reason we actually get to that Fib 100 area, we actually get to your 1.14 region, then yeah, sure, I'll go look for hammers, I'll go look for dragonfly dojis and use those as an excuse to jump in. But if we don't get there, if we just consolidate over the next couple of hours, then we will trade a break of your previous candlesticks highs, a break of your high wave doji's resistances to go long. So nothing immediate, guys. We tend to think that we are at a nice spot to consider going long, but we want to confirm it with price action. We want to see a break and a close above the highs for the previous hourly candle. Okay, so no immediate action for us. Let's just wait for this to happen. Give me a sec though, guys. I'm just going for a quick break. All right, let's move on to something else. Just delete those. And oh, let's take a look at the Aussie. Okay, guys, funny thing, if you folks attended our session on no coding EA development last Wednesday, we did a robot for CTrader. We were developing a robot for CTrader. We did a CBot. We wanted a CBot to trade using using limit orders, or rather, we wanted a CBot that would trade if certain price levels were hit and the accompanying candlesticks show up. And what was the result, guys? I forgot to, well, let me just show you. So here's what our CBot did. So basically it opened these trades. It looked for a hammer, and we told the CBot, if there's a hammer, go buy, as long as the price was already above the 64. I think we were using 64.50. No. Yeah. We instructed CBot to just buy whenever prices were above the 64.50 level. I did not anticipate that it would get triggered this way. In any case though, what I'm trying to point out is that we were showing how people can do CBots, can do EAs without, without them knowing how to code, as long as they have access to Grok or ChatGPT, and they can just put their logic on paper. They can write things down so that an AI can read it and understand the instructions and code the necessary commands into a proper trading robot. So that's the result of our EA. looking for. Basically, we instructed it to look for hammers or dragonfly dojis, and if it sees hammers and dragonfly dojis, it will just open a trade. Now, I wanted to point out that in CTrader, you don't have to use your VPS. The platform has its own cloud server, and you can just run your CBOTs from the cloud. Okay, free. Anyway, let's get back to our charts. And since we are looking at Aussie here, let's take a look at Aussie. So why am I interested with Aussie? Because I think that we are in a critical period as far as the Australian dollar is concerned. Why do I say this? Well, take a look at the chart. You're essentially at the midpoint of this previous consolidation. Well, not quite the midpoint, but you're near there. Now, that's the weekly charts. If you end up with very bad numbers from US jobs data, we are looking at this and we're thinking potentially you could be talking about finally getting out of this month-long consolidation in your Australian dollar. Of course, if you happen to have a positive surprise, what's a positive surprise? You end up with 100,000, 111,000 in your non-farm payrolls data, then that would be a nice excuse to say continue with this consolidation for the past month and a half, but end up with a very weak number, a very bad number, and that's argument that says look to push through consolidation resistances. So like we said, a very critical juncture at this point for your Aussie chart. It has been well resisted for the past month or so, and you potentially have the catalyst to get out of that consolidation, or if not get out of the consolidation, if the numbers do come out strongly, come out good for the US, then you have the catalyst to say continue with the range play. We're actually talking about how many pips here, guys? So we're talking about the possibility of easing off from 6,500 all the way down to 6,350. So nothing immediate here, but something to watch out for. All right, guys, let me go back to overview. Where else should we be going? Where should we go next, guys? We actually have an ongoing breakout in our daily chart for silver. Now, I have to be honest, I'm not very familiar with the fundamentals behind silver prices. But let's take a look. Maybe this is something. Oh, okay. It's an ugly. I'm saying it's an ugly chart because we are at historic levels in silver. I always don't like to take trades when things are at historic levels because you don't have a reference on on what to do, on figuring out support and resistances, on figuring out what's critical for other market participants. So yeah, I thought that it would be something interesting. But however, I would point out, guys, that these are new highs for this particular chart. Okay, so nothing there. I don't like chasing. Um, well, if you really want to play silver, I would say at the very least look for a pullback to happen. Yeah, even in the hourly chart, it's so difficult to do because your high is in an active candle. Okay, let's skip to something else then. I always want to have some reference point. Wow, it's like I'm going to have a storm here. Okay, where to? All right, dollar yen may be worth looking into simply because we are at your 21-day exponential moving average. We've been consolidating throughout the week and we are seeing just half of our average daily range. Let me zoom in. So we're trying to take out this EMA line. Although it's been whipsawed in already before that, I wouldn't really categorize it as a very significant, a very strong resistance, exponential moving average, a very strong resistance. Let me just see where we are with respect to ranges. Okay, so average daily range for dollar yen is 153 pips. And for today, how much of a range do we have? About 80 pips. All right, so there's room to maneuver if we do have that breakout. It's going to be a tough low because of the moving average line. Okay, I'm looking at the hourlies and yeah, this doesn't look like it's a very exciting chart to be in with. Okay, so Unfortunately, we're not really keen about taking any immediate action here, guys. But again, this is all about US data later. If you end up with bad numbers for the US, then for poor payrolls data would have us thinking in terms of easing to, or rather pushing towards the highs for the week at first. That's about 144.40. Working rate is around 143.92. Of course, your eventual objective, if you base things on your average daily range, would have to be something like 144.80, given the low at 143.39. So there are bullish arguments for our dollar yen chart. We just find it a little bit constrained right now. I think a lot of people are just waiting for the US data. So guys, nothing immediate. It's all going to be about what happens in the US later. Okay, where's my pen? Looks like we have a calm before the storm, folks. Okay, so I guess as we said, guys, no immediate trades in dollar yen. It will be about your NFP results later as well. I guess it's going to be the theme for practically all the dollar pairs right now. Well, if that's the theme for dollar pairs, let's try and look at the crosses. We typically don't really cover them, but let's see how they look like. Let me just add symbols here. So let's add the crosses. Euro yen, Euro pound. Notice that we're still sticking to major currencies. And let's just put these on the charts. Let me just do this, guys. Well, we are a little moved as well in our euro yen, in our DJ. I guess this is a market that's waiting for its catalyst. Having said that, let's take a quick look at where the charts are. Okay, the thing is, we've had bad numbers from Europe already, and yeah, we're seeing some limited intraday action. In fact, we've sold off for the past hour. So what are we looking at? Okay, because any US data will have an impact in dollar yen, in EUR USD, in GBP USD, AUD USD. I'm not going to put a lot into the idea of a correlation with NFPs. Remember that both of the currencies that's involved with this pair, with this cross, are not the dollar. What I'm saying is your EUR USD, your USD JPY, they have to see a clear direction, meaning either you're seeing dollar strength or dollar weakness, and you'll have to evaluate how that translates into our chart. But if you were to look at this from a technical perspective, I would say emphasis is to be given on the idea that you've had this before. You've consolidated, you've formed a triangle over the last 2 months. So as far as this goes, guys, I'd rather stick technical as long as I've got shooting stars and gravestone dojis. I'll be a willing seller in our EUR JPY. All right, folks, so I guess this is it at this point. Nothing exciting. Again, the data will be out in about 6 hours from now. If you're trading with prop firms, remember that they don't really like you to trade data. If you're trading with brokers, well, I would say I will wish you luck in your execution price later. So guys, thank you for joining, and hope to see you on Monday. Hope to see you next week.